Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, New York City, we have Alistair Reynolds. He is the portfolio manager of global emerging markets with Martin Currie, a Legg Mason affiliate. We're going to take a look at big themes for active managers in 2020. Alistair, welcome to the Nasdaq market site. It's great to have you with us. And emerging markets, you think it's a good long-term growth opportunity?
Yeah, Jill, it's looking really exciting. We're talking about a huge opportunity over the long term. You've got about 4 billion consumers getting wealthier every day, and as they move into the middle class, they're going to be about 1 billion more over the next 10 years, and that's really driving a really sustainable growth for emerging markets. But to tell you that doesn't happen overnight, then it's not always going to be in a straight line, so we kind of need a supportive global backdrop to make that happen.
All right, and some of those things in the backdrop, cutting interest rates, it seems as if global central banks are acting within concert of each other. And then the trade war with China seems to be de-escalating, and you think those larger macro factors is helping with the rest of the emerging markets?
Absolutely. So last year there was a lot of concern around about the imminent global recession. There was concerns about the trade wars, but that started to clear slightly. What we're seeing now is, while we're not out of the woods on recession yet, there's less fear than there was last year. There's a trade deal expected to be signed later this week that should help alleviate further fears also. Interest rate cuts right across the emerging markets last year. We had in total 3,200 basis points of interest rate cuts. So that's setting the scale for a return to growth this year in emerging markets. And for the first time in a long time, we're expecting emerging market earnings growth to outstrip that of the US.
Why do you think an active approach is best for emerging markets?
Well, we certainly think it is the approach to take. And what we'd say is if investing in emerging markets, you're looking across in excess of 20 different countries across a range of industries, from old economy right through to cutting edge innovative tech businesses. And really it pays to be selective, and that shows up in active managers outperforming the passives year in, year out in the emerging market space.
Are there some areas that look more attractive than others?
Well, certainly for us in 2020, thinking with the theme of returning earnings growth, Korea we think is going to be a standout area, really at the vanguard of that change. And I'll give you a couple of examples that will be relevant to a US audience. One is smartphones. If you think about the smartphone market, it's almost 1.5 billion handsets per year. That market's not been growing in recent years because of a lack of new features. But this year we've got a global rollout of 5G networks. We're also seeing the advent of folding phones where you can take a laptop-sized screen and fold it, put it in your pocket. Now the leader there, Samsung Electronics, it has about a quarter of the global market for smartphones, and they make up about 50% of the Samsung sales. So it's really going to benefit from that global trend. Another area that we're looking at is electric vehicles. So you may have heard about electric vehicles, not really seen much presence of them other than maybe Tesla, but this is a year when they really start to go mainstream, and we're seeing launches from the likes of GM, Ford, Chrysler, VW. All of those brands are going to be using Korean batteries, and that's going to be a big play in driving Korean earnings growth again this year as well.
It's so interesting that you bring up Tesla this morning in the electrical vehicle market. I mean, it's Monday, January 13th. Tesla traded above 500 for the first time pre-market, so it seems to be, and I think part of that could be that they're entering the Chinese market. There's high demand in Asia for those types of vehicles.
Absolutely. We expect China to lead the way in terms of demand. It's one of the biggest car markets in the world, and we expect them to drive the electric vehicle growth. Tesla are there already, and they're actually in their Chinese plants are using Korean batteries, and that's been behind their recent success, is the strength of that China launch.
Well, that ties in well with both of your themes, technology and EV in Korea. Thank you so much for joining us at MarketSite, and thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.